Hi there, welcome to our weekly bulletin. This is the third week of February, and in this weekly bulletin, what we usually cover is how did the markets perform, what is the expected in the next week, what were the key results, and some specific sector or something which we go deep dive in a particular sector and we cover that. So that's exactly what we would be covering in this weekly bulletin too. So the first thing is how did the markets perform? Definitely it managed to close about 22,000 and it was up by 1.19%, primarily on the back of DII's buying. And despite the fact that FIIs continue to sell in this week, and this is the second consecutive week of selling by FIIs, there was stability in the market to a certain extent apart from 1 or 2 odd days, and it closed at 1.19% higher. There are together around 38 advances and 12 declines. So overall, a very positive week for the market. Now, if you really look at it, one of the key things that we also want to believe is that we always pick up a quote every week and try to stay genuine to what our philosophy is. So here's a quote by Philip Fisher. The stock market is filled with individuals who know the price of everything but the value of nothing. So what it means is that we are saying that the markets are trading at 22,000. That's the price. But in terms of the valuations, is this the valuation? Is this a justified valuation for the market? Our take on it has been that currently when the market is trading around 21,500 to in between 22,500, the markets are slightly overvalued when we look at the median PE or the PEs in which it has operated traditionally. Because it has traded somewhere around 2021, but as you know, because of the total number of SIPs and the amount money come in the system, the P is expanding not just because of the actual growth in earnings, but it is also expanding because of more access to the capital. So it's slightly above its averages. I still believe if we were to look at the valuations perspective, from Nifty 50 at 22,040, we are 5 to 7% above its fair valuations. Now, this can come down because markets typically trade plus minus 10% of its fair valuations in a regular market. There should be a trigger, and if there's any uncertainty in the elections, we will see this price going down to 20,500 also. But otherwise, it might just continue to stay in this range bound till we see some major macroeconomic situation changing, or for that matter, election results becoming more anxious prone. So that's where Nifty is trading now. In terms of how did it trade in terms of the sectors, auto up by 4.33%, primarily on back of some very good results or slightly better results for the companies like Eicher, Mahindra and Mahindra and Maruti. So all of these companies which form a major part of auto sector and did a good run up during this week. That's why the sector closed at 4.33% up. Energy up by 1.6, which is more or less in tune with what the overall Nifty trend is. Even IT up by 2%, and metals down by 1.47, primarily because of the fact that there's been enough run up in this sector over the last few weeks. So that's how the sectors were in focus. Now what we have done this week is we have tried understanding power sector, because one of the things that came out in the interim budget was also the focus on power, especially the renewable power. So we're looking at some of the historical data. We're taking a few companies to check out what the key ratios look like, and we'll try and give our verdict that if we have to build positions on what we're going to build on that. So that's this week we cover power sector, and we're just scratching the surface for power sector, because power sector is one of the most important parts of the infrastructure and for the growth of economy. So we're going to go deeper into it over the next few weeks, or for that matter months, and we will be dissecting this in more detail. But this is just a beginning. But even in the beginning, what we are going to cover is more specific, so that you start thinking or considering about some of the stocks. So that's about power sector that we are covering, and we are also going to cover Q3 results for Coal India, which happens to be one of the key major input suppliers to the power sector. So we're going to cover that, and Eicher Motors from the auto sector. And the process followed for both Coal India and Eicher Motor is exactly the same that we've been talking about. When we started this channel, we actually started leveraging AI to build, identify the key trends in the market, especially in context of quarterly results. That's exactly what we have done over here. So let's get into the first part of it. That's dissecting the power sector. Now, if you look at the power sector, the first point being that, it has grown around at CAGR of 6.5% in the last 10 years. But this includes both the fossil fuel and the renewable sources of energy. Now, the idea over here is that, it grew at 5.5%, and the power sector, the renewable part, grew at 11.7%. Now, what we expect going forward is that the overall sector will grow at 8.8%, or for that matter 9%, because that's a little bit of a estimated figure, not an exact figure. Now, the current capacity in the power generation sector is 428 gigawatt, which this includes all types of power, that is the fossil fuel and the renewable sources of energy. What's expected going forward is that the overall sector will grow at 8 to 10%, but the renewable sector itself should grow to 500 gigawatts. So that's a major part of the whole puzzle. Now, if this has to grow, then obviously the companies which are operating in this space are expected to grow, and that's where all the action would be. I would think that, and that's what we need to identify through our methods, that, okay, if all our focus is in this area, then which companies to go after. Currently, the renewable sources are at around 128 gigawatts, so it's expected to grow significantly in the coming years. Now, the key players in the power sector, especially in the power generation sector, is the NTPC, NHPC, Tata Power and Adani Green. Now, NTPC is primarily the thermal power plant, so this is not expected to grow as much as the other two, that is especially the Tata Power and Adani Green, which operates more in the renewable power sector. NHPC being the hydropower sector, it's expected to grow because it still becomes a part of the renewable system. Now, if you really look at absolute numbers, the price to earnings for NTPC is the most reasonable one, but because of the fact that it is not expected to grow at as fast rate as the other three, the price to earnings is at 16.8, NHPC being at 25.1, and Tata Power being at 35.1, and Adani Green at 183, but that's primarily coming because of the huge profit growth that it has demonstrated in the last 5 years. That's approximately 61%, and that's the premium that it is enjoying in its P, and that gives it a PEG ratio of 3, whereas Tata Power, if we compare the growth and combine the P part of it, it comes to 7.78. NHPC is at 2.66 and NTPC is at 1.81. Now, net profit margins, if we really look at it, NHPC is performing the best. It's at 30.6, and this is also one area in which there is a lot of expectation in terms of the expansion. There are a lot of plans to expand the capacity over here. So overall, if we really look at it, what we believe is that the sector is overall very stressed at this point in time. When we look at these numbers, we're not going to build very specific positions at this point in time. However, if you want to take a bet, then for us, it's still the NHPC which forms the primary one which we would take a bet upon at this point in time. So the key takeaways, as I mentioned, that primarily reducing technology cost and renewable energy is the focus. Thermal power is likely to decline. That's why NTPC is not there at the top of the list. And there is significant premium to Adani Green and Tata Power. So we will not be trying to build position at this price and at this particular situation. But if we have to take a bet, then NHPC might be one of them that we might take a bet upon. but we will only dip in small. And over the next few weeks, we are going to study this sector better. It's not just going to be about power generation, power distribution, power finance, and even the exchanges like IEX. We will be trying to understand and we'll be sharing that. So we might be in a better position to make strong recommendations over the next few weeks. Stay tuned. But this is just a beginning of the power generation sector that we're talking about, the overall power sector. For us, NHPC is still one area in which we might bet, but bet very cautiously. So that was about power sector. Let's dive deep into the Q3 results. The first one being the Coal India, which is also a supplier to the power sector. Revenue up by 3%, which is not much, but given that it is a PSU, it's one of the large organizations, it's still a decent one. But profit, a whooping 17% year-on-year increase. So that's the silver lining in this particular stock. Sorry about my skills at this point in time. But yeah, profit up by 17%. Coal production up by 4.8%. Coal offtake, which is primarily how much mining is being done, up by 8.8%. So the production is actually 4.8 up, but actual coal being mined is up by 8.8%. It also announced a dividend of 5.25. So overall, a very good quarter for Coal India, and that's reflected in their response that the street gave to their earnings. It's up by 10% ever since it announced its results. And if you really look at the metrics, it's trading at 10.1%, 10.1p after in the last it's grown from 5 in the last 6 months. So it's a significant uptake, and going forward, I think it might stabilize, or there might still be some room, because both profit is growing as well as for that matter the P is expanding. If you are one of the investors already into it, then there is definitely you can hold on it. Don't build fresh positions if you haven't already built. Look for a dip. Maybe it's still a good buy at this point in time. So that was Coal India. Eicher Motors revenue up by 12% year on year. Profit a whooping 34%. So this is where a lot of growth is coming. The profit has increased significantly despite the fact that the revenue is up only by 12%, but it still missed the estimates what analysts were expecting out of it. EBITDA up by 27%. Domestic sales are up by 5.6, but the part which missed out was the exports, which is down by 24%. Now overall, in terms of the verdict, analysts have given a positive, although it did meet the analyst expectations. Overall stock price up by 3%. It's trading at 28 and it has been at this level for the last 6 months. If it continues to build, then maybe it can grow up till 31, 32. So there is some room for growth over here. If you're looking to invest, then maybe you can build some positions over here. So that was the week in focus with two primary results, Coal India and Eicher Motor. Auto doing extremely well, and we covered the power sector. I'll see you in the next week. Hopefully the market remains stable. I don't see a major uptick. There's nothing very clear signs that any macroeconomic situation is in the negative direction. So we don't expect the markets to break down below 21,700 or something like that. And at the same time, there's nothing major which will take it about 22,400, because as a trend what we are seeing is that FIIs are reducing their positions, but since there is a lot of local money, domestic money, DIs are pulling in, and that's why market continues to be in the range bound space. I'll see you in the next week, wherein we cover one more sector and we come back with some quarterly results and how the markets perform. Have a good week. Stay tuned. Do your research before investing. Bye for now.